All right, we are live, and I'm just gonna jump right in. If you are new here or you don't really know me or you're not familiar with me, my name is Kay Joof. I am an accountant level bookkeeper. I made up that term, and um, I will explain it a little bit in the comments section, so don't worry about that. I do have 18 years of experience in the industry. Um, for bookkeeping, accounting, I started low, built up to being a senior accountant, and I'm looking at my handy dandy notebook. If you know, you know. So I've always been in this industry ever since I turned 18 and got a job. So I love it. I'm really good at it. But I wanted to share a little bit of insight today into some of the most common questions I see or hear from new or active bookkeepers in the industry or people that are just looking to get started. So, one of the things, and this was a very popular topic and an important one that I saw, which is what do you do if someone's auditing your work? How are you going to prepare for it? What are you going to expect? All that fun stuff. So I just recently went through a version of an audit. It was basically an acquisition. And so when you have an acquisition of one company to another or any kind of like really big operational transition, then you have to go through basically an audit. It's a very, very stringent and intense audit because they want to make sure that all of the numbers that you have on your reports are accurate and that they can dive in and they understand all of the numbers. So I will be looking down at my little papers and notebook just to make sure I don't miss anything. So bear with me. The first thing I want to say about your work getting audited, there's a lot you can do to prepare for this, but honestly, it's mainly just maintenance. It's are you doing the monthly bookkeeping correctly? Are you reconciling and everything? And can you explain everything that happened during the month, during the year, during the quarter, right? I want to stress the fact that mistakes happen. No one is perfect, and every mistake can be fixed, but it just depends on how the mistake needs to be fixed and what's going on. Now, mistakes shouldn't be often or excessive. As I said, as long as you're reconciling monthly and reviewing the P&L in multiple formats. So, what I like to do is go month to month and review spikes and dips and make sure I understand what's going on there. If there's a new account that just got used that isn't normally used, I'm going to dig in and figure out why if I don't already know why. Basically, you have to make sure you can explain everything that's happening in the system. Now, the main thing here is to be transparent. Don't be ashamed to say, you know what, this is a process gap and we haven't been doing it this other way you're talking about because we don't have XYZ systems in place or we don't have an employee that's assigned to do these things. We don't have capacity, whatever it is. So just be transparent there and make sure just as a bookkeeper or as an accountant that you express that you are willing to help bridge that gap. That's the main thing because then you're looked at as a team player, you're looked at as an important component to the business. All right, the next thing I want to cover is something that most of you may know. If you are reconciling the balance sheet every month, and I'm talking every single account on the balance sheet, not just the bank account, not just credit cards, then this should be a part of your month-end close process or quarterly, whatever the company wants you to do. So let's say you are not processing payroll. And so you're just handling month-end close, the accounting piece of it, recording, all that fun stuff. So when you are not processing payroll, you absolutely have to reconcile payroll. That you will have a handful of payroll liability accounts on the balance sheet, and so you're going to want to make sure every single one of those clears out or has a reason why it doesn't clear out. So as an example, if a payroll has just processed and it's at the end of the month and it just hasn't been paid out, that's a normal situation where you'd have a balance in a liability account. Also, things like benefits, like 401k that needs to be sent out, garnishments, things like that, that kind of come in separately at different times. So as long as you can explain what's in there and why it's in there and what's going to happen, that's fine. That's the main thing. Now, on the P&L, you might have some more work to do. So as the bookkeeper or accountant, depending if you have an on-site accountant or a company accountant, you as the bookkeeper might actually have to do this, which if you're on accrual, which I specialize in, you're going to have to accrue for payroll based on the days in the month that we're missing. Maybe they're on a payroll in the following month, but there's always a crossover, almost always. And so you want to make sure you accrue for the time that's going to be posted in the next month, in the current month, so you capture all of the expenses. But you also want to pay attention to if the company is tracking employees by department or by location. You want to make sure you pull the P&L by those standards and make sure that they're all looking good. Make sure everything has a class or a location, and then you're good to move on. If you find any errors, just fix them and move on. So that's the payroll aspect. And if you do or don't process payroll, you still have to do all that. Another thing that's come up recently, and this comes up, some companies just are this way in general, but mostly companies have cash flow issues when there's some kind of big economic situation going on. So when I first learned about cash flow and how to help a company with managing their cash flow issues, there's usually a shortage of cash because people are not paying their invoices. In general, a lot of companies actually have a standard where they don't pay their bills for 90 days. No matter what the due date is, they basically disregard that and just pay when they're ready to pay, which is 90 days in larger companies. Now, with cash flow, there is a strategy that you can help the company with, which is processing accounts payable in a specific way. Now, I'm not going to get bogged down in the details. I do cover that in my course, but I'm not here to pitch that. Just saying there's ways to process AP to where it might help a little bit with the company cash flow issue. You do also have to time the AP runs during a time frame that payroll is not hitting. That's always a rule of thumb with AP when you have payroll coming out. Now, the other thing with cash flow is, and this really comes into the freelance world of bookkeeping, is the client actually paying your bills or your invoices, right? So are they paying your fee every month, or are they super delayed in that? Or is the ACH bouncing back? Stuff like that. So you're going to want to make a decision. If you really like the company or you want to be really nice, and you feel for whatever they're going through, you can do a few things to make sure you're still covered at the end of the day, but also to make sure they understand, like, okay, you care about the company and it's not just about the money. Not everyone can do this. So you can be flexible in this area and set up a payment plan, or just keep communications open and just kind of work with them in that aspect. So payment plans or just delays, and be like, okay, I'm gonna keep working until hopefully you can get caught up. Or a lot of times what people will do is just stop working completely until they get caught up, which can be a problem if you have a lot of work to do for that company, because then you're just behind. Some people have late fees built into their contract, so that's something to think about as well. Another thing people do is, if it's a frequent situation, it's causing a lot of stress on you and your business, you might want to actually disengage. So all that is up to you. Cash flow issues are very common in difficult times. Right now, the economy is very uncertain. People are struggling, people are nervous, so it's probably more common at the moment. Another topic that I see a lot, this might be actually the most common topic or question or concern that I see, and people make out this topic to be really, really complicated, but in my opinion, it's not. People are concerned, especially as beginners, on cleanups. They're concerned with handling a cleanup. If they get the opportunity to take on a cleanup, which a lot of us want to do because there's good money in it, honestly. And so if you want to take on a cleanup and you're not sure what's going to happen, there's a couple things I want to mention on this topic. One, you could just have imposter syndrome. If you have the foundation of accounting really solid, you could just be psyching yourself out. That's the first thing. Second thing is, if you don't have a really solid foundation in accounting or you don't have a lot of experience in it, you might just need a little more education or a mentor or something like that. So I would, suggest go learn some more, figure out how you can really get a handle of this lack of knowledge or this knowledge gap so that you can proceed. I would honestly not take on a cleanup unless you're confident that you know what you're doing, because if you don't know what you're doing and you're going in and you're trying to fix things, you might actually make a bigger mess than is already there. So that's the reality of cleanups. However, if you have a strong foundation in accounting, and I'm talking you have gotten the education, you might have a little experience, you might have a lot of experience. I was never taught how to do a cleanup. I've done several massive cleanups. There's a lot to consider with cleanups, but the trick is to think of it as I'm basically doing a monthly bookkeeping client. I'm doing all the things I would normally do monthly, which is maybe categorizing, maybe just double checking a lot of the categorizations that are already in the system. The biggest thing is making sure the categorization was done correctly, right? The other thing is, if you don't have enough information on transactions, you might need to talk to the owners or previous bookkeepers or the on-site managers, and that will help you to understand different processes that are happening, things like that. So you really have to nail down what's happening in the company so that you can understand what should be happening in the accounting system. So once you know that, all right, basically a annual cleanup or 2-year cleanup or a quarterly cleanup is basically a monthly cleanup, you basically think of it as a larger version of that. So you can do it a few different ways, but there are things you need to do before you get started. So one of the things I highly suggest, I've made this mistake before where I didn't do it and I was kicking myself afterwards because I wanted to show a before and after to my client what I did so they understand what they got for their money and how much work went into it, and also sometimes what the prior bookkeeper or prior CPA firm or accounting firm did not do. Okay, so they want to show before and after so they can see, oh, this was really messed up, this was very different, right? So one of the things you want to probably pull is, if you are adjusting the chart of accounts at all, you want to pull down what's already there, all of the accounts that are listed, and then just, start making your changes. Before you do any changes, you want to pull the ending balances for the prior period that you are not changing. So if you are not changing, let's say 2024, and you're starting on a cleanup for 2025, you want to pull the year-end balances of the, not necessarily the P&L, but the balance sheet for sure. The P&L is going to be kind of locked in because it is what it is. It's not rolling into the next year. You don't have to reconcile all that. You might want to look at the prior year's P&L just to see if there were any errors that are affecting your balance sheet. You might want to kind of look at the P&L for that. But as far as the ending balances of the prior period that you're not changing will be your beginning balances of the period you are cleaning up. So you want to pull that report, the balance sheet for sure, so that you can kind of see, okay, did the numbers change also after my cleanup? Because that's important. Sometimes we'll put the wrong date in there and it'll mess up the prior year. So if you do mess something up, then you can go back in time. A way to eliminate this error is to actually close 2024. In this example. So you go into the accounting system, you go to the area that says close the books, and you put that ending date. So in this scenario, it would be 12/31/2024. Okay? So lock that down. That way, if you're doing entries or you're changing things, and let's say you put in the wrong date, maybe you put in 2023 on accident or 2024, 2020, it will give you a pop-up and say, this period is closed. Do you want to proceed? And don't bypass that pop-up. Say no and go back in and fix it because it's likely your date. So that's first thing. Pull the reports, lock your system for the period you're not changing, and then start moving forward on a month by month basis. Some people go through the whole year at one time. Some people go through a quarter at a time. The problem with that is if it's a larger company and high volume transactions, that can be really overwhelming and really difficult to reconcile. So you want to go through, in my opinion, month by month. Month by month is best. Bank accounts and credit cards for sure. If it has a monthly statement, reconcile it month to month. As you go, obviously, if you're closing month by month, you're going to be reviewing everything. You're going to reconcile every single balance sheet account that has a balance, and you're going to make sure you do that offline. You don't want to use the QuickBooks Online tool unless it's a bank account or a credit card, because with those, you actually have a statement. Or also loans and leases. With those, you have statements that show you exactly what transactions are in there and what the balances are, and so you can just attach those in the reconciliation tool in QuickBooks or whatever system you're in. Every other balance sheet account should have an offline, basically an Excel file or workbook showing that you've reviewed all of the transactions in there, that you've confirmed they are correct, and that you've fixed any errors that you did find. So that is called, from CPAs, they call it work papers. So if you ever hear that term, that is what a work paper is. It's your offline prepaid schedule, insurance schedule, or reconciliation in general. Once you've done, let's say, the whole year or a whole quarter or 6 months, then you're going to want to pull the income statement for that period. And I recommend pulling it month over month. So you have the comparison between January, February, March, April, May, June, right? That way you can start to see trends. This is important to pull as many months on that report in the columns as you can, so you have a good understanding of the trends. And then what you're going to do is, I typically print it out if it's too big to work with it on the screen, or if there's too many lines or whatever. I'm going to print it out, and then I'm going to highlight any spikes or dips from one month to the other. So for example, let's say you have an extra expense in some kind of specific, like, repairs and maintenance accounts, right? Let's say the company has purchased a lot of supplies. Okay, so that month, the supplies, the repairs and maintenance account will go up, right? But maybe the rest of the months are more even. Let's say the rest of the months are around $2,000, and that month specifically is $4,000. As long as you can explain the spike, it's not a problem. As long as you go in there and you know, okay, nothing is miscoded, there's no issues here with reclasses, whatever, then you're good to go. And then just make sure you can explain anything. So if there's a spike, if there's a dip, and you can explain it, you're good. If you're looking at different things that are either in the wrong accounts, or maybe they need to be split out in some way, you want to determine if you should reclass something or recode it. Okay, so reclass means you take a journal entry and you move one thing or a group of things to another account. First, you have to be comfortable with journal entries in general. So if you're not, then this might be a little difficult for you, and you need to go learn debits and credits for a journal entry. If you know that, and let's say you have a ton of automated system transactions that were posted wrong because there's a setting that's wrong or something like that. So let's say there's, I don't know, like 50 in one account. Well, you're not going to want to go line by line and change each one. You're not going to want to reclass each one. So you're going to basically download the list of everything you're reclassing, and you're going to use that download, that Excel spreadsheet, to upload to your journal entry, and you're going to do a bulk move. So you're going to move it all from this account to this account. Now, if you have them all in that spreadsheet and you realize, okay, some of these go to one account, others go to this other account, then you just do that on the journal entry. It's not a big deal. If you're going to reclass something with a journal entry, you need to make sure that if the company needs to capture things like class, or another term for that is department, if that's what they're using it for, class, location, project, customer, vendor. You want to be very careful on not losing data when you do the reclasses. And the reason is, if you have certain department heads or just management that wants to look at different departments or different locations from the P&L and just filter to see, okay, I want to see this department on the P&L, then, or this class or this location, then that data is going to be missing, or it's going to look skewed. So you want to make sure that those fields are filled out. And when it comes to the vendors and the customers and projects and stuff like that, you want to keep those in the journal as much as possible, mainly because if they drill into an account, they're going to want to look just at first glance at what this is associated with. And that brings me to the notes. Notes on a journal entry and on any transaction should be thorough. Notes should say what the dates are, if it's a service, or if it's a term, or if it's a product, what date the product was purchased, what it was purchased for. So if you have some kind of computer, was it purchased for the IT department? Was it purchased for accounting and executive, whatever. So you're going to want to make sure all of the details that you have that might be important end up on that journal entry on the line item. Now, if there's a ton of them and you want to just kind of have one note, you can copy line by line the note, or you can just say in general, true up for XYZ, and then maybe have the backup in there that kind of shows line by line if you have a ton of things in that entry. The main rule of thumb with journal entries or transactions is you can never have too much information. You can absolutely have too little. I don't know if any of you have seen prior bookkeepers or accountants or CPA firms make really vague notes on entries and maybe don't have backup. It's really difficult to figure out what they're doing if it's not really straightforward. So as an example, if they have an adjustment to overhead from inventory or something like that, if they don't put their backup in the journal entry and they just say overhead adjustment, that's not going to say anything to you. You can't tell how they calculated it. They don't tell it. You can't tell if their numbers are right. You can't tell why they're splitting things the way they split them. And sometimes you can connect the dots, but that's the risk of vague notes. It doesn't have to be a CPA. I've seen CPAs do it, accountants do it. I've seen bookkeepers, clerks, you name it. All different levels have done that. Vague comments are not helpful. And sometimes people do that so that they are not expendable. It's a tactic. So, and then I've also seen where they make reclasses and adjustments that are all over the place and excessive because they don't want anyone else to know what they're doing, and they want to make it seem more complex than it is. That's a reclass. Now, that's different than a recode. And if it's not self-explanatory, a recode is going into the transaction and changing the account on that transaction to point somewhere else. So let's say you have a bill and it's pointing to rent, and it's actually for supplies for cleaning or something like that. Then you're going to go into that bill because it's one bill, and you're going to change the account it's pointing to. Now, first you want to make sure that when you change the account, it doesn't clear out all of the other information. If it does, then exit out of the transaction before you save it and open it on a new tab, open it on a different tab, copy and paste, or write it down, whatever you have to do to make sure you retain all of the information that was on there originally, and make sure it has backup. If you have a lot of transactions that don't have backup, that is a red flag. You need the backup. You absolutely have to have the backup, whether it's in the system or in some kind of shared drive, and that's because you can purchase many things at these stores to make sure it qualifies, one, as a business expense, because you want to make sure personal expenses are not hitting the P&L. You want to make sure it's a business expense that has an explanation of what it is and what it's being used for. So that's typically if you have a receipt for, say, a computer. You want to make sure they're writing on there, or writing on the receipt, computer for so-and-so, computer for IT department, something like that. You just want to make sure that data is captured so that it's a proven business expense and you don't have to wonder, is this going to be called out that we don't have the proper data on it, etc. No matter what you're doing in the accounting system, whether you're a bookkeeper, whether you're an accountant, whatever you're doing in the system, you have to make sure that you can explain everything. Mistakes happen, and that's fine. You can correct them after the fact, but if they are excessive or frequent, it's likely that either you don't know what you're doing and you need to freshen up on whatever material you need to learn the job better, or you're moving too fast and you need to slow down and pay closer attention. The biggest thing in accounting is paying attention to detail.